today, of course, bonds is not my main topic. What I actually want to talk more is stocks. Okay, the main product for Singapore Exchange is actually still stocks, equities. By the way, that's not true for different countries. Like for example, in US, in fact, the bond market is bigger. It's just that for Singapore, stock market is actually more active. Now, so under stocks, I'm actually going to talk about three main things today. Like I said, I'm just going to give a very brief overview so that at least it's more for you to find out further. So at least you have an understanding so that you can have a start to go and find further. So today we'll actually talk about blue chip REITs and ETF. Now the good thing here is this. Okay, there's actually this thing called the lot. Bought lot. Okay, one lot is 100 share. Okay, please remember the terminology. So once again, you know, investing is not like I don't care lah. I just throw in money will come back to you. No, like I say, investing only rewards educated investor. So try to, you know, since you're going to spend 1 hour with me, try to learn something, try to remember some terms. Now, one lot is 100 share. So in SGX, minimum is to buy one lot. Okay, so a lot of people ask me, do I need to amass a huge amount of money first to invest? No, answer is no. So in fact, we have some stocks as 20 cents. Okay, how many do calculate? If let's say one share is 20 cents, how much is one lot? Can someone help me type into the chat? Okay, one share is 20 cents. How much is one lot? $20. Thank you so much. So in fact, today with $20, you can start investing already. Okay, so you don't need to amass a huge amount of money. But please take note. Please take note. Every time you buy, you have to pay a commission, which can go up to like $25. Every time you sell, also you have to pay a commission, which can go up to $25. So yes, I can say that minimum you buy is one lot, $20. But let's say this stock 20 cents, you buy $20, but you have to pay $50 of commission. Then I don't think it's worthwhile. Okay. Personally, if you ask me what's my personal recommendation, I think you should spend minimum about $1,000 per share that you buy. Okay, $1,000. Okay, then in that case, your commission is only about 5%. But if you actually want to buy smaller, you can. Okay, so careful. We have people actually want to buy 100 share, which is one lot. Say longly, go and tell them I want to buy 100 lot, then become 100,000. Sorry, become 10,000. So you can see it's actually quite different. Okay, and we actually want to, okay, so down here we basically focus on what to buy. So a lot of people also miss out this point. In fact, investing, another very important component is how to buy. Okay, I always tell people what is investing is to have this process, create this process so that your money can work harder for you. That is investing. So please, I know a lot of people down there, their first instinct of investing is buy low, sell high, buy low, sell high. No, that's not called investing. That's called trading. Okay, trading at best, and sometimes people call it speculation. No, investing is what is this process? Okay, what is the process for your money to work harder for you? How to create this process? That is called investing. Okay, today we're actually going to talk about one of the simplest one, which is regular saving plan. So we'll talk about it very soon later. Okay, now let's talk about blue chip first. So basically, blue chip, they are the largest company in listed in whichever exchange. So usually they're established companies with track record. Okay, but how we measure large company, we use this term called market cap. So again, try to pick up some terms. Market cap is a short form for market capitalization. This is how we measure the size of the company. So market cap is the stock price times the total number of stocks available. Okay, if in Singapore context, market cap more than 2 billion is actually considered large. So usually they are established demand for their products. So they are either products used by customer on daily basis or subscription-based business. Okay, let me just go through example. For example, I talk about transport, ComfortDelGro, SMRT. So all these are large company. Food and beverage. Okay, dairy farm, Thai Bev, so on and so forth. Banks, okay, Capital Corp, SGX, so forth. So like you can see, so companies use for customer on daily basis, all these large companies, or either subscription-based business. You talk about telco, newspaper, REITs, we'll talk about REITs later, and of course, a regular service provider like SETS and SI engineering companies. So these are large companies. Okay, so again, you know, have this context. I'm not a trader, you know, I buy this company make money. Just like I mentioned, the profit come to you. How does the profit, when the profit come to you, is actually in terms of what? Why is it being caught? What are you earning if you buy a company and hold for long term? Okay, can someone help me type the chat? Okay, dividends. So in fact, when you talk about investing, dividends is a very critical component, key component, and dividend come from profits. So that is what investing is about. Okay, don't always think of buy low, sell high. Investing is, this company is good. Okay, this company continue to make money. I'm buying their profit. Okay, and the profit comes in terms of dividends. Okay. So as you can see, for blue chip, usually they are very mature companies. So you can see that their profit is quite more or less quite stable. You can see here the profit is actually quite stable. You don't expect, wow, suddenly increase a lot, decrease a lot. And because their profit is quite stable, they can give the shareholders very steady dividends. Okay. Okay, today another term you actually need to learn is actually this thing called Straits Times Index, STI, Straits Times Index. This is what we call a market benchmark. So in all stock market, okay, there's actually this benchmark, so that once we see, we know that the market, did it perform well or not well. Okay, in Singapore, the most prominent one is actually this thing called the Straits Times Index, whereby, okay, it's basically, you can think of this way, we just add up the price of 30 most representative stocks listed. Okay, of course, the actual calculation is actually a lot more complicated, but you can think of it this way. Instead of adding up all the stocks listed, we just add up the price of these 30 stocks, so that we have a rough view of, you know, how did the market perform today. Okay, make a guess. Can someone tell me what is the STI today? Anybody know? For those who don't know, maybe you can just type in some numbers. Make a guess. Anybody? Thank you so much. I'm quite close, about 2006. Thank you so much. So of course, then we say that STI went up by 13 points. It actually improved compared to yesterday by 13 points. So the market actually performed better today. So again, know some terms. STI, Straits Times Index. So of course, you can go and Google all this. It's all available. In fact, you go to SGX website, the first thing you see is the STI performance. So like I said, it's about 30 stocks. Okay. So of course, most of the, in fact, all of the 30 stocks, all of them are blue chip. So if let's say one way is I want to buy blue chip, you can buy STI or look at what are the stocks under STI. So those are basically blue chip. Okay, the next category that that I actually want to introduce to you is actually this thing called the REITs, or Real Estate Investment Trust. Now, as per what the statement here, fancy owning a piece of prime real estate just a few $100. So in fact, again, when people ask me, I'm not only a multiple business owner, at the same time, I'm a global property owner. Okay, so in my talks, I always like to tell people, if you ever go and visit Raffles City Shopping Center, I'm quite sure you know Raffles City Shopping Center. If you go to the second floor, the toilet, the male toilet, please treat the toilet with care. Why? Because the toilet bowl, one of the toilet bowl down there is mine. Okay, so what happened here is this, if you buy REITs, you're basically pooling money together with a lot of people and go and buy the property. And based on the amount I paid, I think probably just nice can buy the toilet bowl. Now, if you want to join me, if you also want to own another part of Raffles City Shopping Center, which REIT must you buy? Anybody? Which REIT must you buy? Anyone can share the answer? Anybody want to give you a try? If let's say you want to also own like me, not Suntec, Capital Mall Trust, thank you so much. Capital Mall Trust, I actually just buy Capital Mall Trust. Okay, now I am the owner. Every time I can go to every time I go to Raffles City Shopping Center, I always tell them, hey, you better give me discount because I'm one of the owner. Right? You can always try, but so far I haven't been very successful. Okay, so have that visual in mind, very important. Okay, again, when you buy stocks, you're not just buying, I don't know, some paper or some number that moves. No, you're actually buying your underlying asset. So in terms of buying REITs, you are actually buying property. Be very clear, be very clear. So that day I was very happy. One person I just bumped to the street, he suddenly told me, hey, Imin, wow, after that day I attend your talk, I actually went to go and buy the bench outside the OUE tower. I was so happy because he bought this thing called the OUE Commercial Trust. So he said now the bench is his. So he sees it now. Okay, so that visual is very important. So what is a REIT? So basically, this is what happened. You're buying properties. We have the REIT manager. They will actually put the property together into a, you can call it a company. You can call it a company. So put the REITs together. And the property can be in terms of hotels, healthcare, industry, commercial, retail, whatever. So of course, we make money. How do we actually make money from properties? Can someone please help me to type in the chat? Okay, how do we actually make money from properties? Okay, rental, thank you so much. Then we just down here collect a steady rental. Very simple model. You are a landlord after you buy REITs. And in Singapore, a lot of REITs have overseas property. That's why today I am not only multiple business owner, I'm also multiple property owner. Like just I own a very, very, very small piece, like the toilet bowl or the table outside the building. But that don't deny the fact that I'm the owner. Okay. There is actually some uniqueness for REITs, something unique about REITs. So mandatory distribution rules, they must distribute at least 90% of the profit as dividends. So this is the only instrument listed whereby based on black and white, they must give dividends. So that's why it's very good for people like me. Why? Because I am hopefully I can retire soon, and when I retire, I actually want to have a passive income from dividends. And REIT so far is actually one of those instruments that have the highest possibility of giving a steady dividends. Okay. Next is this. They have a mandatory debt ratio limits. They cannot borrow more than 50% of the property value, which again prevent them from getting trouble with the banks. And the other good thing here is this. There's actually no corporate tax at the REITs level. And distribution payout are tax exempt from individual investors, also as a very tax efficient vehicle. Okay, so these are some of the uniqueness for REITs. Okay, so of course, REITs market has been quite significant in Singapore. Based on my latest data, we are the third largest in the Asia Pacific region. So we are only smaller than Australia and Japan. Okay, we are the third largest REITs market in terms of number of REITs and the market size. Okay, now you can see here our first REIT is listed in 2001, and now we have seen 42 IPO REITs. But you will realize that we now only have 41 REITs currently because of merger. So some of the REITs, they decided to merge. Okay, so even though down here it says 42, but we only have 41 REITs now because of merger. Like I said, there are a few REITs with global properties, so on and so forth. As you can see in the report, REITs have become more important than ever. So in fact, if you look at the STI index, quite a number of them are actually REITs as well. So you can see so far the payout has been interesting. So this is a bit dated, February 2020, but the number still stands. If you buy REITs, you are talking about getting a 6.2% dividend, okay, on average speaking, which is quite good, quite healthy. You think about it, can someone tell me if you put money in a bank account, fixed deposit, what kind of interest are you getting? What kind of interest are you getting? 1%, 1.2%, 3%, so good. Wow. Likely to be 1%. For those who actually say anything more than 1%, you better check. Usually that one is called promotional rate. 1 year later, you will switch back to 1%. So be careful. I know banks usually have play a bit of this kind of game. So for those who are getting more than 1, please make sure when they renew the next year, it's actually still more than 1. So in any case, you can see that, hey, you can think of it. REITs is a bit like fixed deposit. Of course, they are totally different. Okay, totally different. Okay, so if you actually put money in fixed deposit, you get 1%. But if you actually put money in REITs, you also can see that, I'm actually getting a fixed income 6%, which is like 6 times more, which is you do your maths, can be actually quite exciting. Of course, REITs is more risky. Okay, REITs, the price can change. I know fixed deposit, you put $100 in, you confirm you get $100 out. But for REITs, the price can change. Of course, you have to learn how to mitigate that risk. But if let's say you are able to successfully mitigate, you're talking about 6 times more, which is, if you ask me, I think is quite what you call it? No, it's quite worth the risk. I put it that way. Okay. So again, you can see out of 10, 5 of the stocks that are most highly traded in STI are REITs. Now, for REITs, for if you actually want to buy REITs, the most important, of course, there is a lot of detailed analysis, and definitely we don't have time to go through. But for today's purpose, if you actually want to buy REITs, you understand this. The most important analysis factor here is this. 5 years later, 10 years later, can it continue to rent out? That is the most important question. Okay, there are other analysis criteria, sure. So if you're interested, I do have courses on REITs. You can actually learn more about it. But the most important criteria here is you gotta ask yourself, okay, this property, 5 years later, 10 years later, can be rented or not? So to answer this question, we number one classify them in terms of the property types. So we have office, we have industrial logistics, we have retail malls, we have hospitality, which is hotels, and we have healthcare. So we classify all the REITs into these 5 property types. Then you have to ask yourself whether going forward, do you think that, you know, this property, can it continue to be rented out? So let's say, for example, offices. Maybe I ask, offices, I think we all know what happened to the offices because of the COVID. A lot of people decided to work from home, and now a lot of people said that the office rental will suffer. Maybe it's time to poll. Who thinks? Can I just ask? Who thinks that work from home is actually going to be a permanent feature for yourself, or either that for most of the company? If you think so, can you say yes? I think that eventually work from home is going to be a permanent feature. If you think that no, eventually people still need to come to office and work, then you put no. Quite interesting. Quite interesting. We have quite mixed. In fact, half. Thank you so much. Thanks. Okay. So of course, if you think that because of this COVID, then that's it. You know, the office are going to suffer. People are actually going to work from home. It's going to be permanent. Then of course, don't touch office REITs. If that's what you think. Okay. If you think that no how to work from home, eventually you have to come back one. That office is actually still good. Then in fact, today may be a good time to enter into some of these office REITs because the price actually came off quite a bit from its peak. So like I said, you know, end of the day is about future telling. Nobody know the answer best. You have to believe this property 5 years later, 10 years later can be rented out. So my personal belief is, don't have to agree with me, but I believe that work from home is unlikely to be a permanent feature. It probably can be an alternative but from a corporate perspective, I think we still need the staff to come together. We still need people to come to office. So that's what I think personally. I'm actually still into office, but of course, I'll be more careful. I know that this sector will be disrupted, so I'll be more careful in selecting them. Okay. So and so forth for the rest of the property types. Okay, maybe the one that's interesting here is this retail malls. Okay, so a lot of people has been saying that next time don't have retail malls because everything go e-commerce. So do you think that's possible or not? Do you believe that we can live in a world one day whereby there's no retail malls, everybody buy things go to e-commerce? Is that possible? Wow, I saw a long no. Okay, thank you so much. I think most people actually put no. I totally agree with you. I really doubt that we will live in a world whereby there's no retail malls. So in fact, I'm actually still quite bullish in this sector. Personally, I still quite hold a few retail malls. Okay, so again, don't have to agree with my analysis, but like I said, this is the main thing you need to look at. Let's say, sorry, don't have to agree with my conclusion, but focus on how I analyze. In fact, by REITs, the main thing to look at here is this property 5 years later, 10 years later, can it still be rented out? That's the most important point. Okay, So we also have hotels. We also have healthcare. Again, same thing. Like do you think that people will stop? People will stop using hotels? Of course, now the hotels are being affected by the COVID. If you believe that wow, with this COVID, the whole world will stop traveling, then of course, then hotel's not for you lah. But you think that hey, this is only a very short term time. After COVID, people will all go and travel. Then of course, hotel may be quite interesting. So that's REITs for you. So like I said, what we have done is like market analysis, demand and supply, and of course, eventually talk about pricing. So these are some other things you have to look out for: location, age, land title expiration, and so forth. So basically, to analyze REITs, yeah, there's still quite a number of things to do. So please, whatever you learned today, like I said, is probably not enough. It just want to introduce you to these different instruments and hopefully point you to something where you can learn further. Okay, so again, the questions has changed. Do people still shop in malls these days? Is it traditional office layout thing of the past? The search for authentic travel experience. Airbnb, is it actually going to is it going to kill off all the hotels? So these are the questions you need to ask. In fact, these are the more important questions compared to some of the numbers, actually, if you ask me. So basically, like I say, very similar to what we have shown just now. Is now that but we just have more instruments. So again, end of the day, what instrument you choose depend on your risk return appetite. If you are someone who cannot take risks and someone who don't need the high returns, okay, like I said, I will start from zero. I'm not investing, but let's say I need a bit of money. I want low risk. I can go to government bonds. Okay, so on and so forth. Then of course, on the other extreme, higher to the higher risk, you have all the smaller cap, mid cap stocks. Okay, the last group of instrument I want to introduce you is actually this thing called exchange traded funds. So what is a fund? A fund is basically, you can imagine this. Let's say me, I form a fund company. For example, me, then I collect money from you. All of you actually give me $100. Okay, then maybe I collect $200,000. So when I collect, I'm actually selling a unit of me. Okay, so maybe I split, I form this company, I split, I call units, I split into, let's say, 200 units. And each unit I sell for $100. I sell to all of you. So basically, if you buy a unit of me, you're giving me money. And with this pool of money, I go and buy a group of stocks, or either a group of bonds, or either a group of instruments, underlying instruments. So by owning a unit of me, you are indirectly owning the basket of instruments. Okay, then in this case, I am the fund. I am a fund. And because you can buy me from stock exchange, you can buy and sell me from stock exchange, I'm called exchange traded funds. So of course, there's actually a lot of funds out there. Like for example, if you walk into the bank, sometimes you get this very pretty salesperson or very handsome salesperson come there and say, oh, sir, man, you have so much money in the bank account. Why don't you consider investing? Those are also funds. In Singapore, we call them unit trusts. In US, they call them mutual funds. Okay, so they are not sold in exchange. That's why they are called exchange traded funds. So to call exchange traded funds, they have to be sold in the stock exchange. So some of the uniqueness for exchange traded funds compared to other funds, a lot of funds that are what we call index tracker. Okay, what is index? Just now we actually learned one index. What is the index called? Can someone remember? Hopefully can remember. We actually talk about one particular index. Thank you so much. STI. So STI have how many stocks? Underlying stocks. Okay, so basically there's actually this thing called, thank you so much. There's actually this thing called STI ETF. So if you buy this STI ETF, you are indirectly buying that 30 stocks. That's what it means. So of course, if you actually want to buy US, now can someone tell me what is the two main indices for US? Two main index for US, what are they? S&P 500, thank you so much, Dow Jones Industrial. So of course, there are also ETF on Dow Jones, ETF on S&P. So S&P 500, that means you have 500 counters. So you actually buy this S&P 500 ETF, you're indirectly buying that 500 stocks. And of course, the performance will be tracking the index. That's why it's called index tracker. Okay, relative to unit trust, there are lower fees because, especially for index tracker, you don't have a fund manager. You don't need to pay someone to make the decision. So that's why you can have lower fees. But of course, now there are more and more non-index tracking funds. So please take note, not all ETF are index tracker. Some ETF, they actually have a fund manager. Then of course, the fees may not be lower. Okay. In Singapore, most listed ETF, they are index tracker. So you don't need someone to make decision. You don't have to pay that particular person. But like I say, not all. Transparent, predictable. So this one, okay, again, compared to unit trust. So if you realize, if you go to the bank and buy unit trust today, they only can tell you what's the indicative price. Then you actually can only know the price at the end of the day. So for ETF, no. So you can buy and sell. Technically speaking, you can buy and sell ETF on the same day. So what you see on the stock exchange is that price. Okay, so this is exactly what I talk about STI, ETF. So basically you buy 1 unit of STI ETF, you are buying that 30 underlying stocks as per what this picture is trying to say. So it's actually very good for diversification. So in fact, I'm quite sure since young we learn don't put all your egg in one basket. So this is very true for investment as well, especially if you're a retail investor. How do I define a retail investor? Someone who probably only can spend maybe like half a day in 1 week to look at stock market. The best way for you to make some money is actually do diversification. So it's actually a very good way for you to diversify. Instead of buying the stocks individually, just buy the ETF, you're buying that 30 underlying stocks. So some other benefits, I think more or less mentioned just now, cost effective, lower charges, transparent, okay? Can buy and sell anytime. So this is compared to a unit trust now, because if you actually want to buy unit trust, yes, you can buy online, but not as convenient. But and most of the time, a lot of people buy unit trust, they have to go to the bank. I want to sell that time, they have to go to the bank. So whereas from stock exchange, you can buy and sell just like any other stocks. Okay. So there are ETF that track the stock market, as I mentioned just now. So you can actually, if let's say basically you want to invest in Malaysia, Philippines, Vietnam, you can actually do so through Singapore Stock Exchange, and you actually buy them using the ETF. That's what it's actually saying here. So today, not only SGX not only offer you Singapore stocks. If you actually want to invest in these different countries, you can. Or if you actually want to invest in region, also can. Like for example, Asia X Japan, emerging markets also can. And this is up and coming. We have this thing called REITs ETF. So basically, if you actually buy this, you are buying a basket of REITs. So again, this is getting quite popular recently as well. Bonds, we also have ETF that specialize in bonds. So again, you'll be buying a basket of bonds. And again, this is something quite common in Singapore. So there's this ETF, there's this gold ETF. So we call it paper gold. So far, to my understanding, this is the one that tracks most closely to the gold price for retail investor. If you actually want to buy gold, if you actually go and buy the gold coin, or of course you go to jewelry shop and buy gold, you realize the gold price is quite different from the gold price you see on the website. If you actually want the closest to the gold price one, in fact, this is one instrument that track quite close for retail investor. Okay, gold ETF. Okay, so as I mentioned, we also have the REITs ETF. So basically, there's 3 of them. When you buy this, you are buying a basket of REITs immediately. Okay, I'll show you. Go through the navigation later. But in any case, if you want, you can take a screenshot. So this one, this is basically if you actually want to download the full list of ETF, where you can go to sgx.com, securities product ETF downloads. Then you can actually have all the details of ETF. Okay, but later I'll actually give a very quick overview of where you can get all these resources. Okay, so I more or less covered an overview. Again, like I said, today there's no way I'm going to make an expert. Hopefully I can point you some direction to get started in investing. So some of a very simple way to start. One way is actually this thing called regular share savings. So what is it? A very simple automated process. You buy a variety of stocks. Okay, fixed investment amount and dollar cost averaging benefits. Okay, this is one term you may actually want to pay attention to. A lot of people actually say Dollar cost averaging. What does it mean? Basically, you actually invest the same amount at every different point in time. So in this case, when the price is high, you actually buy lesser. When the price is low, you buy more. Also, this is one very easy way to craft your investment process. Just how we mentioned about investment process, right? This is one easy because, in fact, the most difficult question to ask here is this: when is the best time to buy stock? Unfortunately, I don't think anybody can tell you. Like now we know, like if you've been following the market, so in March the price was one of the lowest point. Okay, price was lowest point, but at that point in time, you ask me to buy, nobody there to buy. Also, the most difficult question is when's the best time to buy? So one way to counter is you actually buy all the time and you buy the same amount so that when the price is high, you buy lesser, price is low, you buy more. So it's always, this is what I call dollar cost averaging. Okay. If you actually want to find out more about regular share saving, these are the few places you can go to: DBS, FSM1, OCBC, and Philips Securities. Sorry. So these are the few places you can go to. So basically what all these places do is they help you do regular investing. You can automate the process. So you can go there and say, okay, I want to buy STI ETF every month. So they can automate the process for you. So in this case, what we call regular savings in that sense. So only these few places can help you to do so. Okay, now, so if you want to learn more, what are the places you can go to? You can go to SGX Stock Trainer. Okay, later I'll do a demo for you. Easier to see. Of course, you can go under the Research and Education tab. Okay, again, I will do a demo for you later. So basically, these are the two main places for you to learn things on the website. Of course, like I say, end of the day, please don't just blindly filter or just a lot of people like to make this will make this mistake. I just collect all the different criteria, then I just filter. Then don't even care what the company does. No, please no. So further research is required. Like for example, do you understand the business? Do you believe in the business model? Do you believe in the company? That is in fact the main questions to ask. So don't. Even though I actually introduce those website for you, okay, please don't just blindly see, okay, profit high is good, profit margin more than 5 is good. No, must understand the business. So again, this was, I just want to read the point that I actually mentioned earlier. As a FA, you buy a stock, you're buying the underlying business. Okay, so of course, there's a lot of causes. Again, like I said, upfront, if there's only one thing you can bring back, be an educated investor. I'll be an educated investor. So there's a lot of ways for you to get the education. Okay, one is of course the SGX Investor Resources. If you want, you can scan the QR code right now. Okay, maybe I give you 1 minute to scan the QR code right now, or you can remember this web link, sgx.academy.com/investor resources. So you have a lot of information out there for you to start your investment journey. Okay, obviously if you can come for my courses, so really do support. So basically this is where I represent SGX Academy. SGX Academy. So of course I do conduct courses there. So I actually focus on FA fundamental analysis. My FA course is actually going to start soon, so do keep a lookout for it. Okay, so this is where I'll share with you what is my investment process. What is the process for me to create a portfolio that give me long-term average return about 10 to 15% per annum. So based on history, give me about 10 to 15% per annum. And of course, that is also how I'm actually going to build my retirement fund. Okay, so for those who are interested, keep a lookout. I believe we are going to have the preview very soon. So this is the website to go into, sgxacademy.com. So if you want, you can go and search for my name, and after that, the information is there. Okay, so some of the program are Skill Futures Credit. You can go to the Skill Futures website to go into to look out for it. I do hope to see you again in our future webinar. Okay, so be it my webinar, hopefully you can come from mine. If not, I have a lot of colleagues. So stay at home, watch webinar. I think you can learn quite a lot. Okay, thank you so much.